Good morning and welcome to this NASSCOM webinar on emerging technologies in the financial services, implications and way forward. Today, we are having a very esteemed panel of leaders with us who is going to throw light on this very important topic. My name is Sumbul and I'm part of the NASSCOM Northern Region team. I'll take you through the details of what we are going to cover today. The emerging technologies are having a major impact on the fintech industry, leading to the development of new and innovative products and services. Some of the most important emerging technologies in fintech include AI, quantum, blockchain, distributed ledger technology, and these technologies are rapidly evolving and they have the potential to revolutionize the financial industry. In this webinar, we will explore how these technologies are being used by the fintech companies and what the future holds today. I will now take you through a quick introduction for our panel speakers. Today, we have the session moderator Amit Gupta, who's the head of technology architecture at Nuclear Software, Sarva Srinivasan, the founder and CEO for Easy Ops Incorporation, Charu Bhargava, the COO and senior vice president at Staco and Sheila Foam, Anjan Pandey, the product evangelist and assistant vice president at Business Next, Ravi Madira, the EVP merchant services at Pine Labs, and Naveen Sethia, the vice president and product management data and risk head at Paytm. With that, I hand the session over to the session moderator Amit to lead the discussions from here.
All right. So, to start with, to set the right context for the session, let's take a moment, let's spend a minute imagining a world of finance. Imagine a world of finance where financial transactions are not just instantaneous, simple, secure, but also accessible from anywhere at any time. A world where personalized financial advice is available at your fingertips. A world where investments are made with remarkable precision, very high accuracy. If you're wondering, the vision of this world is not too far away into the future. The vision of this world is already becoming a reality today. And thanks to all the rapid advancements that we've been seeing in the emerging technology space today. Today, many of us don't want to navigate through the complex menu structure of our websites, opening up menu options and then sub-menu options, and then landing on the page of our choice. We don't want to Google the customer care number in order to talk to the customer care executive or write emails to them, which often goes back and forth in order to explain our query to them. Today, what we have got are virtual assistants, digibots, which are AI powered, which provide a very easy to use, convenient and intuitive interfaces using which we can ask our queries, we can post our queries, we can type in the question, or we can speak to it through a microphone. And immediately we expect a very clear, concise, crisp, and consistently correct answer in no time. Today, there are financial applications which help us to operate our finances better, to be able to manage our finances better. There are financial applications today which help us to understand what is the inflow, outflow of money from our accounts. Not even that, they also help to predict the cash flows in the days, weeks, months, or quarters to come. They also remind us for any payments which are due on our account. There are software bots available today which uses robotic process automation that can extract, validate information from multiple sources, multiple documents. We can input that data on any application in just a matter of few seconds or few minutes. That saves us from a lot of manual data entry, which used to be the case earlier. If you think about it, these are truly exciting times to be in, because especially we are in the midst of a technological revolution, so to say. And if you consider the post-COVID era, which was primarily driven by digital transformation, these technologies are completely reshaping or changing the entire financial landscape altogether. Now, this also brings in a lot of unprecedented challenges, changes, opportunities, and implications for all of us. Hence, it is extremely crucial for us to understand what is our role in shaping the new future of the financial world, how we can contribute towards this transformation and be a part of this journey. This is precisely what our topic for today's discussion is, to figure out or discuss the impact of emerging technologies in today's financial world. Now, in order to embark upon this journey, it is extremely important for us to first establish a very clear definition of what are these emerging technologies that we're talking about. So I would like to request our first speaker, Mr. Sarva Srinivasan from Easy Ops. Sarva, if you could, please explain to all the listeners, what are the most significant emerging technologies today which are currently reshaping the entire world of finance, something the technologies which are worth talking about today. Over to you, sir.
Sure, thanks, Amit. And glad to be here with all of you today. Before we really start talking about the technologies themselves, right, it's good to look back. You said these are exciting times. Can't agree more with you. Right, if you look back at the last 20 years, we've had a confluence of some really outlier events, right? Be it the dot-com bust, the 2008 Great Recession, or the pandemic, right? Combined with that, the advances in technology has actually enabled us to solve for problems that we probably never thought was needed or was unviable. Right? What's also happened is, since 2008, we know the regulators have been on a high drive, and they've been requesting banks and financial institutions for a lot of data. That, combined with the digital transformation that you talked about, is actually driving a tremendous growth in the amount of data that people are dealing with now, good and bad. A combination of this, digitalization, the need for automation, and the regulatory needs are, in some sense, adding to the complexity that they're dealing with today. And what that means is you need some really new emerging technologies to deal with these challenges, right? So you can think of a couple, and the market has evolved to a point where there's been advancement in every possible technology that we can think of, everything from databases to computing to chip and so on and so forth. But possibly 3-4 stand out. The first one is cloud computing, right? So when you talk about cloud computing, and we know it's a big push that's going on in terms of everybody moving to the cloud, I still think we are in the first innings of a test match, and I'm going to assume there are 4 innings in this test match, right? So early stages of this move, and it's only going to accelerate, right? And think of AI, machine learning, and I'm going to say something that some of you might laugh at, but there's probably some of us here who still worked on small talk many, many years ago, right? And so AI has gone from crawling to walking to running, and it's actually accelerating now with the advent of ChatGPT, all the LLMs that are available, right? There's a lot of talk about generative AI, and they're all being put to practical use, and that's the big difference, right? So the big difference between what was happening maybe 10 years ago to now is that today we can actually see the fruits of that labor, and we actually see the outcomes of that. So now imagine the world that Amit described, right? All these transactions going on, data is accumulating. So you have large volumes of data, and you have complex problems to solve for, and whether it is banking or healthcare or whatever else, and we are focused on banking and financial services today, right? What that means is you need additional computing power. And where does that come from? I mean, that's where, experts are talking about quantum computing, still early stages, but we know Google and IBM and all these tech giants are deploying tremendous amount of dollars to basically support the growth in this particular area, right? That leaves the fourth horseman, in this case, blockchain, right? I think it's a tremendous technology, and it's a cool technology because it allows you to contain the growth of data, but more importantly, it allows you to have a centralized governance and control mechanism that allows us to sort of build some of these cool applications that we'll continue to talk about as part of this session. So I think these 4 technologies, namely cloud computing, AI, blockchain, and quantum computing, are here to stay, and I think hold the key to our future.
All right. Thank you, Sarva. So it's very exciting to know, technologies like blockchain, artificial intelligence, quantum computing, cloud computing, they're here to stay for a longer term perspective. Let's understand from our next speaker, Ravi. So Ravi, if you could enlighten us with how these emerging technologies that Sarva just talked about, are changing the landscape of the traditional banking and financial services, and how they have been changing it in the recent years. How things are becoming different from the way they used to be.
No, I think Sarva interestingly talked about small talk. I think in a way part of the same group and era. I feel it's an era because whenever I meet any of the startup folks in India, I mean, I'm probably the 99th percentile in the age group, and the kids are so young. But the world has changed tremendously, right? And see, banking traditionally used to be you send an application, file all the documents, they will take whatever time, and then you finally get yes or no. And getting loans has been a problem, is continuing to be a problem, right? That's in terms of the customer experience. Now, the banking rails itself, because they are secure, right? Banking, it's all about money, right? You need security, you need accuracy. Because of that, islands have been created traditionally, right? And breaking those islands, right? The data islands, opening it up is not a trivial task. And whenever you try to open anything related to money, there'll be 101 funny things happening there, right? And so ensuring that you have a secure, safe, scalable environment is not a trivial task. In e-commerce applications, right? It's okay if a transaction fails. Maybe you'll not get your order back, right? But when it comes to money, it is like oxygen, right? You need to ensure that it is secure, safe, and it is delivered in time, right? So this is where I think our landscape in the fintech world changed tremendously, and it has continued to change. In our Pine Labs case, right? When we started off our journey 25 years back, POS machines and enabling card payments was best of breed technology that we had. From there to this point where you can make omni-channel payments anywhere, anytime. I mean, it's a huge shift, and it's continuing to shift, right? So in all of this mix, right, as Sarva pointed out, right from leveraging AI technologies, leveraging cloud technologies so that you can connect these data islands securely and ensure that there's data transparency and data movement in almost real time is very critical. And that's what companies across the spectrum are doing. And whoever is not able to cope up will fail in this ecosystem, right? Now, coming back to blockchain, I think that's a very interesting technology, wherein if you look at any financial transaction, right, there's a lot of it rides on a single transaction that happens when a consumer swipes a card or when there's a UPI payment happens, right? There are a number of new financial innovations happening on just that single transaction, be it buy now, pay later, be it, let's say, the recommendations that you want to offer, right? And there are a number of parties that are either participating directly or indirectly in the transaction. Now, how do you ensure that transaction is recorded and kind of safely, securely, and you give visibility to the right party is a huge challenge. And it's still a problem that needs to be solved. And that's where blockchain will become very critical in our industry. And it takes a lot of effort and investment across the board. And I'm hoping that banks, RBI will mandate it, the large banks will adopt it, and some of the major fintechs will start adopting it, because you need a group of enterprises and initiative at a national level to bring that together.
Thanks, Ravi. I completely agree. And I still remember, there was this incident that I had to get my Demat account opened. That was around 22, 23 years ago. And the relationship manager from the bank handed me over a 127-page document. And I thought that he was giving me a guide to, trade in the stock market. But I was expected to go through the entire booklet. It was an account opening docket. And I was supposed to read every page of it and then sign on every page at the bottom. So we have come a long way, and even after submitting that 127-page docket, the account got operational in 21 days. And I remember I was opening up a Demat account for my father last year. We were traveling in a cab, and I was able to open it up in like half an hour or so, and the account was operational the next day. So we have definitely come a long way in terms of making use of technology and making sure that things are working much faster than they used to earlier. So let's move to Anjan. Anjan, if you could explain with some examples, like any innovative ways that come to your mind or that you are using, or being used in financial institutions which are engaging, better with customers to improve their experience in terms of how they use the financial applications? If you can share some use cases, some examples that you come across.
Sure. Thank you, Amit. And let me start with giving a brief background. So I think all of us on the panel will agree that if we look past, 10 to 15 years and we just plot a timeline, let me start from 2010, when majorly the internet era was born, and all of us in the industry back then, everybody was buying a internet banking solution, right? So everyone wanted to have an internet banking app. The banks wanted to have a net banking. Oh, I have a net banking. HDFC used to offer net banking, and maybe the public sector banks were still not offering the net banking. So there was a era of net banking back 2010. Slowly the mobile adoption grew. By 2015, we are all seeing everyone having a mobile app. Everyone wanted to do this. Why do I need to go to a laptop or a desktop to do my banking needs? Why can't I have it on my phone? And fast track 5 more years, we are today talking AI. And I think 5 years down the line, if we again meet in the same panel, we will be talking a lot of autonomous banking, how maybe bots are taking some part of the banking automations, how human work is heavily reduced in the banks. So point I'm trying to say is, every 5 years, technology fundamentally pushes banks and institutions across the world to change the way they operate. And this you can see, Moore's law is just complementing this. Every 18 months, you see a next chip coming. So if you just plot and keep this context in timeline, what do we see today is, there are two sets to how technology is being adopted by financial institutions. Like in our case, we work with a lot of banks, public sector as well as privately owned banks. And both of them have approach of using technology to address different issues. Let me take an example of a public sector bank. While their primarily adoption of using a technology is to maybe handle rush at the branches. How can they minimize, the waiting time of a person at a branch, and how can they, give that digital service to a banker or a citizen of the country? One example that I could say very easily is a video KYC thing, which is more like a COVID push. Technology was still there, but kind of COVID made the regulatory things happen. So today, my mother does not have to physically go to a branch to give her life certificate for a pension. That can be done on a video mode, and there are AIs to validate that it's a real human sitting, behind the cameras, and you don't need to go there. So that's one aspect of maybe using technology to, cater to the citizens at mass. That's typically government way of looking at it. From a private sector bank perspective, they are majorly acquisition and maybe hungry for market share, and though that's the case for government as well, but that's not their core driver. They're more of financial institution for citizens. However, for public sector banks, it's more around how can I acquire more customers, how can I grow my wallet share, how can I grow my digital footprints. So therein I've seen a lot of banks using digital acquisition processes, whereby just to enter your R number and you just enter an OTP, and if you are a customer, I'll give you the money right away. Those are some use cases that we implement with banks here in Business Next, where they say, okay, he's an ETV customer, underwriting done, have 10 years of credit history, he wants a loan, let me give it in 2 minutes. That's something that we'll be seeing in the private sector utilizing. But more towards this, in my recent 3 to 4 years, there has been a lot of talk in the leadership for using the technology for employee experience as well. So what people are saying that, and this is more for public sector banks, because somebody clears an exam and joins a bank does not become a banker. So he needs to be tased on the banking regulations, banking processes. So there is a huge learning cycle for a banker to become an active banker following all the regulatory decks. So there, I see a lot of banking leaders today talking about how can we make use of technology to deliver this employee experience. So the person sitting next to the counter, he should be empowered with an AI or a bot. If he wants to process a complex request, okay, he does not have a PAN, what is 15G, what is 15H, all of those processes, if that can be taken by machine, so that this gentleman passing from the college becomes a banker on day one. And that time of processing also gets reduced. So fundamentally, three things which I see here from a public sector perspective, it is giving back to the citizens, bringing social services schemes, utilizing technology like Pradhan Mantri Yojana and other financial inclusion technologies, whereby minimum paperwork is needed, but you still can go and enroll in an Aadhaar center and get the beneficiary money in your account. That's from a public sector. From a private sector, it's more how can I acquire customers on a frictionless basis because their customers are more digital savvy. And the third theme that I see is people using it to solve employee problems, saying, how can I reduce my AHT in the call center? How can I reduce the FTR rates, maximize my FTR rates in the call centers? So that's the third dimension where I see technology being extensively used in financial services. And if we again have the opportunity to connect 4 years down this panel, we'll be seeing a lot of these functions going to bots. So maybe some processes will eventually be autonomous end to end and there won't be any human. So that's my 2 cents on this. And I think this trend will continue. And as services providers, software providers, and technology providers, we kind of have to adapt to this trend. And we have to kind of give this dividend back to the customers who kind of help us bring to the masses.
True. Thanks, Anjan. Thanks for sharing those wonderful insights. I believe in order to serve the customers better, we need to gather more data about them. And when it comes to financial applications, data has always been the lifeline of finance. And it is not just about the transactional data that we capture today in financial applications, but also the non-transactional data about customers' behavior, like what are the products they prefer, what are the operations that you usually do on the financial applications. So the amount, the sheer volume of data that we capture today in financial applications, that is, staggering, mind-boggling. And AI thriving on data, learning through data, finding patterns within data. I personally believe that AI is a natural fit when it comes to solving business problems within financial applications. Today, AI's predictive power can be harnessed for solving a number of complex business problems like credit scoring for risk assessment, lending decisions for the loan underwriter, analyzing customer behavior and then accordingly recommending them various products of their choice, for improving operational efficiency as well. So let's deep dive a little bit more on AI, and let's understand from our next speaker, Charu. Charu, if you could help us understand like how artificial intelligence is being used or can be used in order to streamline and automate financial processes, like how it is helping making better decisions for these stakeholders.
So thank you, Amitji. And this is basically a very interesting question. See, we have been talking about changing trends from 20 years back, what used to happen, and now what is happening, and maybe 4 years down the line, where will we as financial institutions and financial market to look at and to experience the way technology actually have changed our life and also bankers' life, or I would say financial streams' life. And one, artificial intelligence is actually not only a buzzword, but it's actually helping lot many problems to be solved. So it is actually playing in a very different, I would say, tangent, but to improve efficiencies, reduce errors, enhance decision making, a better customer experience for that matter of fact. So if we really experience and witness that, if you really see 20 years back or 25 years back, when ATMs were getting placed, it was like a big resistance. But now today, based on artificial intelligence, once you get into any ATM and you just put up your card, they will tell you the last withdrawals or your favorite withdrawals limit. So just understand the kind of convenience and the time saving. It's basically the intelligence is bringing into the system. It's just collecting data and populating what you really need, not only just reducing errors. So tomorrow I really cannot go, and if I am just taking out 20,000 in each time, so I will not by any error put a different number to it. Reduces lot many errors, problems for the bankers, problems for various other parties, not only just on customer experience. If you really look at the credit score, that's a, and every bank needs to work on their NPAs and risk associated to loans and credit risk. So looking at the wide range of data that's available across, AI techniques actually help you to find out credit worthiness. I also understand that with each technology, there is some pros and there are some cons. So if I may not be a very good credit rate payer or a loan payer in past, it does not mean that I will never pay it in future, maybe because of my financial conditions. Or if you really look at the COVID scenario, not many people have lost their credit scores. But still, AI actually help you to put out in I would say in space that this is the credit rating a customer will have, and which actually not only just individual but businesses where bank big loans are concerned, the payment criteria and all is really a very critical point where bank reduces their NPAs. Second is fraud detection, and you really look at the payment method, and these machine learning algorithms actually helps you define these and helps you to reduce and identify the fraud cases. Risk management is another one very critical area. Based on history, you assess the risk potential of a customer. So there are many indicators, market indicators, and not only other financial based on historical data indicators, which tells you the fraud index. So AI is used very extensively there. Moreover, in algo trading today, if you really look 20 years down the line or 30 years down the line, where trading was a big a different game altogether, and today you really have all transactions in real time. The kind of algo trading that's happening today, and the financial market, or I would say the stock markets, are actually moving, and not only just to big players, institutional players, but to individuals also. These are all made available just because of algo trading. Moreover, AI is being used for customer experience, chatbots. Then, if you really look at the way it's all real time, and now banking is 24 hours banking. This has all been become possible just because of AI. Then AI is also being used for personal financial risk tolerance management, expense management for the banks. If you really look at underwriting and premium calculations, so there are a lot many areas where today AI is being used, and AI is sits over the data. So financial institution, as you rightly mentioned, has so much of data, not only just personal payment, historical data, your transactional data, and today everything is finance. So even if you basically swap your credit card in one of the retailer outlet, and you really or petrol pump, you know what the rating is, the payment processes. You have so much of data, and these data actually is being cannot be manually processed. So you need some platform, and AI is, or machine learning for that matter of fact, is giving you that convenience to use all this to improve not only just processes but also to take advantage of it and reduce risk for the banks, for the financial institutions, and provide efficiencies for the customer. And today on these actually makes a better bank or an average bank. This is from my side on
Thank you.
AI
Thank you.
and its usage.
Thank you, Chari. I think you mentioned some very interesting use cases. I still remember I once traveled to Chennai and I got my card swiped there. It was of the same amount, but the merchant actually swiped it twice. So I immediately received a call from my bank, and I thought maybe the call is to check, why the card was swiped twice for the same transaction. But then, the bank executive said that, no, sir, you have never got your card swiped in Chennai. So it's a location-based anomaly that they highlighted and gave me a call back. So I really appreciated that call, and it happened in real time, like while the transaction was being made. So let's understand, from Naveen, our next speaker, if you could enlighten us on what sort of use cases do you see in order to strengthen the security of financial applications, particularly capturing the fraudulent activities that we see happening in the financial sector, especially post the digitization era.
Right. So yeah, thank you, Amit, and very good morning to panel and the audience. So that's a really interesting question because I have a very long relationship with using AI ML for risk assessment and fraud detection. A real quick on my early stage of career where it was not fraud detection, but it was the credit risk assessment, right? So I used to work in Goldman for close to 6 years, and we used to evaluate a lot of asset classes which used to buy for trading desk or investment banking division. So there we still back in 2008 used to do a lot of AI ML for detecting both anomalies. So whenever we get, let's say, a tape which we want to buy, how do you detect which piece of the loan is not the right fit for our assessment, right? So we try to detect the anomaly within the tape, partial out like some loan which you don't want to buy, and then do the credit assessment on the remaining part. What is the probability of default? What is the loss given default? Right? And then if I bring it back to the Paytm world where credit risk we are evolving, definitely we have both credit risk and fraud risk model into the Paytm ecosystem. We have a huge lending book now. In last couple of years we evolved. So I'm keeping that aside because we are doing the similar credit risk assessment within Paytm. On the fraud risk piece, right? This is very interesting piece. Every day challenges and every day put us on the toes, like how to think it again, right? So when I joined, Paytm used to have a lot of rule, right? Where we used to decide, okay, what to allow, what not to allow. The example you took, Amit, right? Suddenly you are seeing the velocity increase and a location change. What do you do in this scenario? Should you block the transaction? Should you put another level of authentication? Should you notify user? So those kind of decision making. Right? But definitely, as you evolve, these rules become difficult to manage because the volume is high. These rules are sequential and these rules are not multidimensional, right? And that's why there is a need to use AI and ML for detecting this fraud pattern, right? So now how we are evolving, right? For each of our route, let's say a transaction is happening, onboarding is happening, a login is happening, or sign out is happening. We have multiple models applied on each and every entry route to us. So for each of the route, we have a supervised model where we are doing, if we know the modus operandi on this particular route, how do we cover that risk? So for example, if you are logging from a different device, we have account takeover model where we know, okay, if you are changing the device or doing this, is it a potential fraudulent login or not? So we have a supervised. Then to cover the leftover risk, we have applied unsupervised on most of the route where we see some new emerging pattern, which are supervised model or the known modus operandi is not able to capture. How can we cover that using the anomaly? So we look at a lot of anomalies, what is happening, and suddenly something is changing. We either do a two-factor authentication with the user or we block the transaction or log out the user. And whatever is the leftover risk. So you have a known modus operandi, which you're covering by supervised. You have unknown, which you are covering with the anomaly. The leftover is still with the rule. Something immediate comes. Let's say Jodhpur scenario comes, right? Where we have the merchant risk as well. Where we suddenly see there are some modus operandi which are being used by merchants to claim a chargeback on us. We immediately apply some rule, protect ourselves from there with a mandate that how can we translate these rules back to either a supervised or unsupervised learning. So we compact periodically these rules back to our supervisor and unsupervised. So this is a three trio, we call that. With this three trio, we are trying to cover each and every and trying to make this platform experience safe for our user. And at some point of time, we want to be super confident that we say if fraud happen on platform, we'll return you the money. So we are on that mission. And with that mission, we are protecting each and every route, each and every transaction you do on our platform with this trio combination. Right. So our mandate is like within a year or so, how can we move away from the rule and completely be a automatic decision engine where our CRO is AI ML based. We don't need a manual CRO. We need only operational force to detect the manual whenever the AI ML is generating the manual review actions. So that's the thing. And I think overall, this piece is going to become more tricky now because with the AI coming, a lot of checks we used to do, like let's say at the part of KYC, you are detecting this person is lively available or not. So we used to have a face liveness model. Now there are so many AI techniques which are coming. You are able to put together a face liveness in a dummy way. How do you curb that? So those are the challenges we are going to focus on that. So it's going to be a very interesting journey. And AI ML is definitely helping us involving in covering known and unknown risk. And without that, this was not possible because in rules, you can only curve what you know, but how do you curve what you don't know? And that too with the efficiency because rules bring a lot of rejection of good GMV and a bad customer experience because you are covering a single dimension, not the multi-dimension. So yeah, this is helping us in that way curbing the fraud risk. We have been able to curb our fraud to a very, very significant level and pretty best in the industry.
Thank you, Naveen. Those are very interesting insights that you just shared. I remember once working, on a very specific business problem here at Nuclear Software, where we were supposed to highlight, any invoices which had most likelihood of vendor not making payments corresponding to those invoices. So, like in case if there is an invoice of very high amount and there is a history of that particular vendor not making a payment on time, then we need to highlight that with a high severity flag so that the corresponding corporate can aggressively chase and then get the healthy cash flow in and get their invoices paid up on time. As we just talked about so much amount of data being captured in the financial applications. So in context with that, let's understand from Ravi. So Ravi, if you can help us understand how data analytics, which is driven by artificial intelligence, can help financial institutions in order to gain deeper insights into their customers' behavior and accordingly solve business problems for them.
Sure. I think AI is a journey, right? And I think it's been there for a long time. But I think with cloud coming in, with our ability to process large volumes of data at a much lower price point and cost, I think the journey has accelerated and it will continue to accelerate, right? And as Naveen pointed out, right, what used to be standard rule-based systems will no longer work, because I think the consumer base, be it the merchant base, when I say consumer, banks, consumers and customers, it's merchants, right? Their needs are dramatically changing. And if you look at a car used to be, in fact, a phone used to be probably a premium product, 25 years back. Now, I think that is the base need. A car used to be something, right, a premium product even 10 years back. Now it's coming to like midstream, right? So I think, and most of the rule-based models cannot evolve that fast. And the nuances across India itself, when the purchase power is increased so much, your standard rule-based systems will fail, right? And which is where AI becomes very critical. And also for having successful AI models, and Naveen can vouch for it, right? Like having a solid, rugged data strategy is critical. And this is where I think industry as a whole, globally and in India, we are struggling. And that's where I think a lot of investment need to go in terms of how do you put the right technologies in place to ensure that the right data layers are in place so that we can actually leverage this, the best of breed AI technologies and heuristic rules to provide the recommendations, be it for financial products based on the needs of the generation, right? Today, most of what you call the student loan is a huge market, right? Now, how do you serve that market, right? Or even for students, right? Not only the school fees or the college fees is provided by banks, but what about helping them with providing loans for devices, etc., right? So there's a huge market that's evolving where your traditional loan models or risk models really cannot solve it. And this is where AI becomes very critical, right? And data is basically the foundation, right? Data with scalable, right? Data becomes very critical. So, I think most of, let's say, fintechs and the banking need to figure out a way to bring data together and ensure that they have solid AI platforms to ensure that, right, they give personal recommendations, right, or for financial products will become solid use cases. In Pine Labs, we are looking at AI to figure out how we can serve our merchants better. So in fact, we leverage chatbots to kind of help our merchants and give them a white glove treatment, right? See, today, most of our user base and consumers, they might be merchant for us, but they're consuming your Instagrams, your TikToks, your WhatsApps. They're used to best of breed experiences. And unless we provide that best of breed experiences across all surfaces, we will not be able to kind of engage them and retain them. And this is where we in Pine Labs are kind of leveraging AI to provide chatbot experiences for our merchants, so that instead of calling call center, waiting forever, they actually can get all their answers via the digital channels. So that's a huge thrust. Same thing in terms of loans, right? Your traditional underwriting models really do not work, right? With CIBIL, how many would have CIBIL? And as Naveen has been working in this space, right? How do you kind of use disparate information, stitch it together to provide proper recommendations for banking products will become very interesting space. And a lot of banks, fintechs have been working in this space. Yeah.
Thanks, Ravi. Interesting insights, and wonderful to know that AI-powered chatbots or virtual assistants are kind of becoming a norm for any financial or a non-financial application. I mean, every application today has chatbots available with them in order to serve their customers better, to overall improve the customer experience. Let's understand from Anjan if you have any views around how AI powered chatbots or virtual assistants enhance the customer support and their overall experience. Is it just because of the ease of use or their availability around the clock, or are there other reasons as well as to why people prefer now using digital bots instead of talking directly to one?
So this is a very good, this is a question I was looking forward to, Amit, and thank you for bringing that up. So my experience working with banks, and building on to the previous speakers' comments. So let's take a look at it. Banks always had high quality data, and all of us agree to the fact that bank actually knows how much I'm getting paid, where am I spending, what's my spending type, am I a lavish spender or a conservative spender. So banks always had high quality data about the customers, but I think maybe due to the regulatory reasons or various restrictions in past, they never monetized that data, and they kind of never made an attempt to leverage that data other than the fraud and the regulatory framework where they were allowed to look at the data only in one specific dimension. I think with now technology maturing and people realizing that this data can actually be made to use. So one of the things that I see happening, and we all may agree with the fact that, see, in financial world, there are no product differentiators. So how do you differentiate one bank over the other bank? Because it's regulatory control. If one bank offers an 8.5% FD rate, the other will also offer 8.5, maybe 8.52, or someone 8.48. That's it. They can't go out, outside an outlier about the regulatory framework. So products are no longer a differentiator. For any financial institutes, and as Naveen was saying, coming from Paytm and other places. So from a financial institutes, if products are not a differentiator, there is no single product that you can make that your competition cannot copy. So if you do UPI, the other guy also does UPI. Maybe 2 months down the line, he'll do it. But it can be copied. So what is your differentiating advantage over in the market? And that's where, the use of AI in empowering the customer service comes in place. So for me and for a large majority of people, when I outreach to my bank in a moment of distress, or when I want to take a service out of the bank, what is my experience about? And this is again an example that I love to give to people that, if you were to do a change of address, or you were to raise a fraud complaint, how would you rate the experience rating with a public sector bank or a private sector bank? Maybe in a public sector, they'll ask you to file an FIR, go to the office, fill up a form, put 2 guarantors, and maybe make 3 people sign it, and then they'll accept that it's a fraud. While, as you said, Amit, you got a call proactively from a bank saying, I see there is an anomaly, sir. I am stopping it before it happens. So, today, the only fact that we see as a differentiator is only how do you service your customer. So let's take that for a matter. So what has happened with all of us is that technology has kind of also changed the way we operate. So today, if I reach out to a Amazon call center, or let's say if I reach to a Swiggy call center, or if I reach to, let's say, a Paytm call center, or if I reach to a Pine Lab call center, versus I reach to a bank call center, the kind of experience that I get from all of these different models will be very different. If I reach to a Swiggy call center, the guy will say, sir, I see you have ordered it from the restaurant. The guy is not reachable. Let me call him. The conversation will start from there. If I call to an Amazon call center, they say, oh, sir, I see you ordered this product. By the way, it's in the transit. It's saying 3 more days. Do you want a refund, or do you still willing to wait? I get my problem solved. But, let's say I reach out to a bank call center, he'll just ask, sir, tell me your cust ID, tell me your date of birth, tell me your phone number. Then I'll say, okay, what's your problem? And if you say, by the way, my problem is with credit card, sorry, you called the wrong call number. You need to call this number, or I'm sending a link, you call that number and then repeat the sold as there. So today, how do you serve your customer? Because, AI is great, everything is awesome. But what happens when I reach out to you and there's a problem? And then everything is broken. Now, we work with a lot of banks here in Business Next, and what we found out, the real cause of the problem was There are too many systems. I mean, the guy is actually helpless. It's not because he is doing it on of his wish. He has to just navigate 12 systems. So if it is a core banking problem, he has to log into a core system. They don't recognize you with a cust ID, they'll recognize you with a SIF ID. If it is a credit card system, you will have to tell your AN number or a credit card number. It does not work in core banking system. So as a customer, as somebody was saying in the previously, data unification is very important. How do you solve the problem of customer service? Because you can't just identify a guy with one common factor in if he's having 4 different products. And if it's a loan product, my God, don't reach out here, sir. It's a liability servicing. Go to assets desk. So that's how I think today a lot of banks are kind of investing. And one of the things that I see as a major project that I had a chance to work on is how do you proactively understand and anticipate a customer need before saying yes or before saying hello? So your greeting should be context driven. And that's where a use of AI kind of helped them. So what they did is that they kind of gathered all the data about a customer. So if you are calling from your registered call phone number, let's say that's a happy path, and the system is able to identify who's calling. And if we see cross our records that okay, there's a fraud or there's a card swallowed that has happened in an ATM, or there's a check bounce that has happened, or something, maybe you're calling for that. So the address should be, instead of interrogating the customer, it should be, sir, welcome to this and this bank. I see this is a problem. Do you want me to proceed or raise a request, or this is the process that I can help you? Anything else do you want me to assist on? And I think if that kind of experience gives back to the customer, that's a real, solving for the AI or whatever technology we put to the business. So that's one of the things that I see. And from a customer service perspective, from a chatbot element situation, my statistical reading for the fact is that if there is a moment of distress, people would like to reach out in person or call. Like in your case, Amit, if there is a fraud happening, you see a SMS coming from twice a deduction, most likely you will not go to a website and try to chat with a bot. You will kind of reach out to somebody in the bank or try to say, hey, there is my money blocked, man, get me back. So what people are now doing, instead of throwing that chatbot to the customer, they are using the agent to make more productive. So they're saying, I'll have the agent use the chatbot, and when you call, he has to just ask the question to the chatbot because it's an internal chatbot. It will go search the core banking system, it will go search the credit card system, it will go search the fraud systems, and will come back with a response which agent can just read through. So it helps you reduce the call time and the handling time, and also improves the customer experience. So I think the investments in past have been made on the customer facing bots. But when it comes to actual servicing, I think using that bot to empower the agent makes more sense rather than just unleashing it there. Maybe that's a sales bot. Maybe if you are looking for a product, you can go and type I need a loan. Maybe it'll tell you 4 things. But if it is a moment of distress, if you lost your wallet, if you lost your card, maybe at max you will ask the bot, hey, what's the phone number where I can call and maybe resolve directly. So that's my view on this whole thing. And I think a lot of people are trying to use IVR bots. When you call, you talk to IVR bot, which is an AI bot, where you talk to multilingual, the bot can answer in multilingual. And if your problem can be solved before going to an agent, they do that. And I think that's where they are using bot before the agent or with the agent, not directly unleashing bot on the customer, because that becomes very difficult. And also people who are not digital savvy, typically in a country like India, where most of the population won't be able to handle and go to websites. So they're using a bot on a phone line doesn't, actually can be a little more effective way rather than just using on a website. So yeah, that's my view on this whole things. Any comments from anyone in the panel?
No, I think Anjan, very interesting, right? I think form factor becomes very important, right? And at least in India, right, the spectrum of, if you look at our literacy rate, right from the metros to deep India, right, and we have to service everybody, right? Financial inclusion is now getting there, but how do you service them is a very, very challenging proposition, right? And as you said, where do you use technology and under which hood you put it is becoming very critical, right? And in fact, when we talk to our merchants, there is a spectrum of merchants who are very sophisticated, right? The top of the line, let's say your Tatas and all of them, right? Then you have let's say a tier two business, which has been there for probably 50 years, right? They've been doing roaring business, but technology is very hard. It's hard for us in this group, right? Now imagine that cohort of merchants, and you need to service them. So delivering technology and packaging it becomes very critical, and that's where a lot of innovation needs to happen across the board, right? We can have AI, we can have all this experience, but how do you package them? And that needs time, and it needs a lot of investment, which today, see, all our businesses are right. Hey, I have to have report profit this quarter, next quarter. It needs a lot of strategic thinking. Anyway, we can talk about it later through the conversation, right? How do you package technology? How do you do user research and kind of bundle these services becomes very critical. And Anjan, as you rightly pointed out, that has been our experiences in Pine Labs, right? Like, hey, we thought, okay, let's put everybody on chat, right? But there is low bandwidth in a lot of places where people can't open a phone sometimes. That's one. Second part is they're used to calling a phone number, right? It's so natural, right? Hey, I'm a cashier, I'm trying to take this thing and my machine is not working. Intuitively, I want to pick a phone and get a resolution right away. That's where, and then when you want to scale that kind of call center experience, you can't scale. You have only so many warm bodies you can put. That's where IVR technology has become really important. And stitching this whole journey, right? IVR, and then ensuring if they land on your chatbot, they should get the similar experience. Or if they go to your app, they should get the similar experience, right? Stitching all of that together comprehensively using solid data, solid AI engine becomes super critical. And that has been the journey for us at Pine Labs in the last few years. And that's kind of what we are perfecting as an art as well. Interesting thoughts. And again, multilingual becomes very important, right? As you go into Middle India, English, yeah, they might know, but all their complex questions cannot be answered. So that's where, for us, auto language translation, AI becomes very critical, where you actually can use technologies. A lot of providers provide that technology, and that's what we have been using, where multilingual becomes an option naturally when you build your technology and software. It's not an afterthought where you have to again invest and re-engineer processes, right? So that's where we put a lot of effort and energy in trying to build those technologies so we can provide support across different languages in India, and we have seen really good adoption in that space as well.
Awesome. Yeah, right. And also, I think with the advent of LLMs and the success of ChatGPT that we've seen, the expectations of the end customer is that they want a very clear and a consistently correct response. The responses need to be appropriate. They need to be, consistently correct, in regards to all of the queries that they post. And if there is a similar query coming in a few days later, it has to be appropriately, consistently correct. I think AI clearly is at a center stage in regards to, solving business problems in financial applications. Blockchain was also mentioned earlier. It is also, revolutionizing, how we think about trust and transactions in today's context. And at its core, blockchain is decentralized. It creates an immutable ledger that records transactions across a distributed network of computers. We have seen significant traction in this space happening over the last 6-7 years, and so many use cases of blockchain have come up in regards to smart contracts in the financial supply chain segment and cross-border payments, cryptocurrencies, etc. Let's understand from Charu. Charu, if you could share some insights about how blockchain can be used in order to create, decentralized financial applications, and what are its implications in today's context.
So thank you, Amitji. So we have been talking about AI, and now comes blockchain. And if you really look, blockchain actually has evolved with financial sector. So we all heard about blockchain when we heard about crypto, and blockchain technology actually, crypto actually leverage the blockchain technology to almost unlimited extent. And if you really look, blockchain is the foundation component for decentralized financial applications. And taking some few examples where today blockchain is extensively being used, is one of the very well-known thing is KYC, identity management. And if you really look and understand what blockchain is actually decentralized decentralized data storage and architecture, where financial institution was all based on a I was a centralized mechanism. Blockchain came up with a concept of decentralize everything and building more security and privacy for every stakeholder. KYC is a perfect example where we basically look at various personal information scatteredly stored and being used by all financial intermediaries and financial sector companies. Then you really look at asset tokenization is another case where it allows it allows you to transact on digital front. So digital tokens are being created for asset management. Then we actually can talk about cross-border payments or money transfers, subsidy transfers, where blockchain concept of blockchain platform is being used. So if you really look, if you want really the transactions to move faster and in a very cost-effective way, we talk of blockchain concept for all payment transfers. Then if you really look at financial, I would say insurance sector, decentralized financial application platforms are being used for collective fund pooling and then utilization of those funds for various risk covers and for insurance sectors. And one of the biggest example is Nexus Mutual Fund, which actually use this platform to a very great extent. So there are a lot many places where today blockchain is being used, and actually in many terms blockchain is actually a synonyms to financial markets and financial sector. So this is from my side as far as blockchain and its utilization is concerned. And I would be happy to hear from others where it is now growing.
Right. So blockchain clearly is another emerging technology that is here to stay from a very long term perspective, especially when it comes to financial applications and its implications in the world of finance. Quantum computing was also mentioned earlier. Quantum computing shows a lot of promise. It may be at a nascent stage right now, but it shows significant progress in regards to creating highly advanced computers that are much faster than the traditional digital computers that work on bits like zeros and ones. Quantum computers harness the properties of quantum mechanics principles, which can allow them to process information at a very high speed. Because they make use of quantum bits or qubits, which can exist in multiple states simultaneously. So let's understand a bit more about quantum computing from Sarva. If you can quickly give us some insights as to how it can revolutionize the complex business financial calculations and how it can help us to progress further in the world of finance.
I think that's a perfect segue into the sort of the computational power that is going to be needed to do all of the stuff that all of you are talking about, right? And I think from easy apps, right? One of the things that we deal with is a lot of operations, and some of these are with the not so much the retail banking, consumer banking, but more of the capital market side of the fence, right? So everything with complex trading, mortgages, fund administration, things like that, where data quality actually is a fundamental challenge that they face. Unlike possibly the sort of the retail banking space where things have tightened up quite a bit, has been tightened quite a bit. I think in the space that we operate in, we actually encounter a lot of data quality challenges, which then causes operational inefficiency. And I know Anjan talked about operational inefficiency. So there's a number of ways in which I think quantum computing can be leveraged, and address each of those points that you talked about. I mean, first one is customer service, right? So the point that was mentioned was, how do you bring different data points together? How do you crunch all this data in near real time and provide the information to the CRM? So when they are on the phone, they're able to actually help address not only the question the client is asking, but also be able to close the deal. Literally, you want to be able to get the customer in when they're actually on the phone with you, right? So that's one example, which is looking at our space specifically, which is, we spend a lot of time with the trading desks. We spend a lot of time with the risk and middle office people. So when you look at that, right, asset allocation is a huge deal, right? Looking for a small variation in the price, right? Price discovery is another huge part. So what does that really lead to? I mean, people are fighting over getting an inch closer to the exchange and have as large a pipe as possible because they wanted that nanosecond advantage. to algo trade, right? So now imagine that they actually have that advantage, and now they also have the advantage of quantum computing, where they can actually crunch these numbers and find that sort of that edge that they're looking for to be able to trade and do better than the next member, right? So that's an area, asset allocation, definitely there's work going on in terms of getting these things organized. Risk and compliance, right? So risk, I mean, even now when we compute risk, especially for more complex products or do cross-value adjustments, things like that, we actually run these programs on large grids, right? So it's think of it as a HPC, but it's still in the old form. It's just a lot of servers running in parallel and crunching these numbers. So those things are eventually going to move to QC, right? But I think the part that we want to think of, Naveen talked about fraud, right? I'm pretty sure there's still a lot of places where, across the world where, fraud is identified, but it still takes time to crunch those data points, right? So I think it's going to just flatten and sort of equalize the playing field, so to say, when that sort of computing power comes into play. And the last one I want to sort of mention here is around cybersecurity, right? So it's a big deal, isn't it? Because at some point we're going to run out of number of keys that we can use, or digits we can use to sort of strengthen our keys. And if the computing power continues to increase, they're going to break it at some point in time. So if you notice, most of the governments have already started putting these regulations in place, that they're talking about what they call the post-Q world, right? It's a post-quantum world, where they're talking about strengthening the the cryptography that we need to use to secure our data, right? So I think it's still in the early stages. Billions of dollars are getting spent by both the governments as well as the leading technology companies. But I do see utilization across the entire spectrum, front office, trading, risk and compliance, client services, fraud, and then, things that probably are not specific to finance and banking, like, cyber, right? So that's my thoughts around QC, and I think it's a very exciting time for us to continue to work on this until neutral atoms come into play. When that happens, who knows what happens.
Thanks for those wonderful insights about quantum computing. I think it was a very interesting conversation, talking about the intersection of technology and finance. It was very enlightening and very enriching, for me and for all of us. So in conclusion, the way forward, lies in responsible adoption, collaboration, and a commitment to using these technologies for the greater good. By embracing these technologies with the utmost care and foresight, we can ensure that the future of finance and the financial services are more inclusive, more efficient, more resilient, and more secure than ever before. Thank you so much for sharing these wonderful insights, and thank you, listeners, who have been patiently listening for the last 1 hour. Thank you so much. Over to you, Sambal.
Great. Thank you so much. Thank you to all of the panel speakers. I think we had some great insights today. And these are like real time examples from the work that you've shared. I'm sure the audience has found it very useful. We request for feedback from the audience. Do let us know how you like the session and what all topics you'd want to hear on this subject. More areas, I'm sure we can get the panel together on a different topic and we can discuss some more interesting topics. So thank you everyone for joining today. Have a good day ahead. Take care. Bye-bye.
Bye.
Thank you.
Thank you.
Bye.
Bye. Thank you.
Thank you, everyone.